Well, before I start this video, let me be very clear with you. I am not someone who is directly trying to pitch you a project. I am just someone who is genuinely interested in the real estate market, especially in the Dubai space where transactions and capital appreciation are at an all-time high. In 2025 alone, Dubai recorded 700 billion dirhams of real estate transactions, being the highest volume in any year, and about 215 transactions happening, which was almost 18.4% higher than 2024. A clear sign that demand wasn't just price driven but activity driven as well. Now let's get straight into the video. Let's start with numbers. In 2025 alone, Dubai recorded over 800 billion worth of real estate transactions and about 215,000 total property transactions, which was 18.04% higher than 2024. This is a clear sign that demand wasn't just price driven but also activity driven. Of those total deals, 149,000 were off-plan transactions, which recorded over 69% of the total sales volume. About 66,000 were resale transactions, which shows that ready-to-move-in properties still attract serious buyers, not just speculators. On the supply side, developers delivered more than 42,000 units in 2025, which was almost 42% higher than in 2024. And new launches, they rose over 177,000 new residential units. Taken together, these numbers clearly tell us that 2025 wasn't just another fluke year, but a record-setting year of broad activity, great investor participation, and a year of liquidity across both off-plan and ready units. And this is not just any vague information. This transactional data is backed by the Dubai Land Department, showing massive confidence across investors and end users in the market. But here's the crucial point that most people miss. Just because Dubai is a great real estate investment opportunity doesn't mean every area inside of Dubai deserves your investment. Dubai is made up of multiple micro markets, each of it with its own risk profiles, investor logic, and its own demographic appeal. Some areas are ultra luxury but low yield. Some areas are high yield but low growth. Others are centrally located but overpriced on what they offer. So in this video, we're about to do something very different. We are not throwing random generic advice. We are not talking about 5 different projects, and we are not even exaggerating any area without any real context. We are going deep on one area, the one district in Dubai that I am majorly focused on in 2026. In this video, we'll cover why this area, what are the numbers, what are the future developments, and who should look at this area and who should completely avoid this area. So let's get into it. Meydan is one of Dubai's most strategically positioned master plan development. It is centrally located but without the massive premiums of Palm Jumeirah and downtown. What makes Meydan truly special is its relation to where it sits related to the Dubai score. You're positioned right between city's most important lifestyle and economic hubs. From Meydan, you're roughly around 10 to 12 minutes away from downtown and Business Bay. You're just 15 minutes away from DIFC. You're directly connected to the Sheikh Zayed and to the Al Khail Road. And you're just 18 minutes away from the Dubai International Airport. Meydan is just not another standalone community. It sits right inside Mohammed bin Rashid City, which is also known as the MBR City. MBR City is one of Dubai's largest and most strategically planned master plan district. The entire zone was conceived to sit between downtown Dubai and the entire growth corridors. Now, because the numbers matter more than narratives, here what the real appreciation actually looked like. Resale price per square foot in Meydan in 2023 was around 1698 dirhams per square foot. In 2024, the same neighborhood saw a price of 1960 dirhams per square foot, and in 2025 the same neighborhood saw the prices between somewhere around 2100 to 2200 dirhams per square feet. That represents consistent annual growth in the central corridor that's still attracting real end users and long-term holders, not just speculative money. And whenever you see that kind of price behavior, the next question is real obvious. What's actually supporting this growth going forward? And this is exactly where Meydan becomes more interesting. When you look at what's coming into and around Meydan over the next few years, you start to understand why this area continues to stay on investors' radars. The first, metro infrastructure. The planned Blue Line extension is expected to service Meydan directly, and in Dubai data, metro connectivity tends to bump property values from somewhere around 10 to 15% once operational. The second, Meydan 1 Mall, a mega retail and lifestyle destination scheduled to increase footfall and long-term placemaking. The third, branded luxury entries. Developers bringing Mercedes-Benz places, Bentley homes, and premium waterfront communities. These act as price anchors, lifting overall district perception and even pricing. The fourth, integrated master plan evolution. Meydan continues to integrate residential, commercial, and retail nodes, which is exactly the kind of mixed-use growth corridor institutional money prefers. And when you connect the dots, past performance, current data, and what's coming next, everything starts to make real sense. And once you understand that, now the next question isn't, is Meydan a good area? The next question is, who does Meydan actually make sense for? Because this isn't a one-time strategy. How you benefit from Meydan entirely depends on your end goal, either as an investor or an end user. So let's break down exactly who this area suits and who it doesn't. Now let's be very tactical about who should pay attention to this area. First, end users. If you want central living with quality planning, Meydan ticks that box without downtown's price tag. Second, long-term holders. If you want steady appreciation over 3 to 7 years, this area has micro drivers, infrastructure catalyst, and sustained demand. Third, yield-oriented investors. If your focus is rent plus appreciation combo, 6 to 8% gross yields with upside make this compelling. But let's also be brutally honest. Who this area isn't for. Not ideal for short-term flippers. This is not a day trading market where you can expect 10 to 20 flips inside months. Those opportunities are rare and typically project specific, not district wide. This is not optimized for ultra luxury, ultra small portfolios. If your goal is trophy asset level portfolio pieces, there are other micro markets that better fit that strategy. I also want you to understand reality. Any real estate transaction has execution risk, macro risk, and even liquidity risk. So the question is not, is Meydan good? It is, does Meydan align with your investment objective? Because if your objective is long-term capital growth plus yield plus central living, this is highly relevant in 2026. So if this information made any sense to you, if this information landed to you in a way that gave you a new perspective to look at the Dubai's real estate market, I have personally shortlisted 5 different projects around this area which have the potential of delivering great returns over the next few years. Now, if you're genuinely interested in investing, reach out to our team, call us on the given numbers below, and we'll personally guide you through the entire process and tell you everything you need to know as an investor or an end user, which project would suit you the best.